So a quick one here on DXY. Remember last week analysis was DXY is coming from a monthly fair value gap. I really don't love to zoom in on the weekly time frame. I just want to focus on the current price action that I'm seeing, or I'm seeing the current draw on the current fair value gaps and all those things. So, but regardless, I'm still gonna let you in on the whole view and the whole stuff. So on the monthly time frame, this was the fair value gap price. What's reacting from in here, here. So yeah, as you can see, that's the monthly fair value gap price is coming from. So now understanding that you can see that price starting reacted swiftly. So we saw price come in, we saw price tap into that monthly fair value gap. So that's just the logic. That's the logic. I'm just using the logic that price is coming from a monthly bearish fair value gap. So if price is coming from a monthly bearish fair value gap, that means I want to be seeing bearish price action most of the time on DXY. I want to be involved in sell setups in the DXY. You get me? Until otherwise, till this gets taken out at some point or something like that. But if this is still respected, I'm still looking at bearish momentum in the DXY. It's just technical aspect of the dollar index. Although we have a whole lot of fundamental disturbing dollar currently, making dollar weaker this moment, but this is just to show you that even the chart, you can just use your technical analysis to understand what the fundamental is doing and also use fundamental. So these two factors helps you. No one is better than the other one. It's just you can just use one of them, or you can just use any of them to just frame your trades. It's basically having a storyline. That's just it. So the storyline here is price is coming from a daily or a monthly, price is coming from a monthly time frame, fair value gap. So now let's go back to our weekly time frame. Let's zoom in. Let's zoom into our weekly time frame. Remember, it's coming from the monthly time frame. So always have that in mind. So zooming into this price action. Now, what is the closest thing that you've seen? Where is price coming from on the weekly time frame? Price is coming from a fair value gap in here. Price is dropping from a fair value gap in here. So what's the fair value gap here? Here, this candle here, this candle here. So the space here. So price wicked into the fair value gap. So after price tapped into this fair value gap, I want to see there is a fair value gap. There is a bullish fair value gap here. So I'm looking for price to join into that bullish fair value gap and also grab this previous week candles low, because below every previous week low is liquidity, and below every previous week high is buy side liquidity. So sell side liquidity is being rested here. After price taps into a sell side imbalance, I want to see sell side liquidity being grabbed. So this is the current week, and this is the weekly price range on the DXY. So let's move into the daily time frame. Now, this is the trading range for this week for me. These highs and these lows. So where are we currently in this trading range right now? See, price is just coming from a premium price. Currently, price is in discount. So I want to be selling. So if I want to be selling, that means I want to be selling above here. If I want to be buying, I want to be buying below here. Let's go lower to the 1 hour time frame. Okay, this is the information. So now I first mark out the day, which is Monday. So this is the information price is giving me currently. What is price telling me? Where is price coming from? Price is coming from a fair value gap in here. Fair value gap. A lot of you might not have seen that fair value gap, so but that's what it is. When you train your eyes, when you keep seeing this thing almost every time, spotting out fair value gaps won't be a problem to you again on the chart, but you should see it everywhere. You'll now be left with knowing which fair value gap is valid enough for you to consider. So price is coming from on a Monday, coming from that fair value gap. I think it's gonna just attack the sell side liquidity in here before, but regardless, I'm still not gonna short this price until price comes higher again. Maybe this time, maybe what I want to see is maybe buy side liquidity here. So on Tuesday, so maybe on Tuesday, that's tomorrow, I want to see a grab of that buy side liquidity for my setup to form on Tuesday. Then I take it lower here. So yeah, let's just see on the DXY. Let's just anticipate the bearish move. So as you can see, this is Wednesday chart on the DXY, and when I was doing the previous recording, this was where I was. That's on Monday, then this being Tuesday, and then today being Wednesday. So this is today on, this was yesterday on DXY. Remember, I wanted to see price price go lower on the DXY. Now, I made mention of something. I made mention of the price range of where we are right now. I made mention of where we are on the price range, and as you can see, we were below here on Monday. We were below here. If you can look at, if you can see the wick of this bullish candlestick, we were below here on Monday. But I said we were already in discount, so I wanted to see price push into premium before I could short DXY, or I could look for any opportunities on the DXY. Now, as you can see, price did rejected and went back inside the premium, and there was a setup inside of here before this price went lower. I'm going to show you that in a bit on the 1 hour time frame. But the fact that you always want to be selling inside of a premium and buying inside of discount is, it should be an important factor to you when you are doing your analysis. Now, some of you might be asking, what's premium and discount? Okay, so you saw me pull out my FIB tool, and I literally measured from the high to the low, the swing points here. Now, in between that is equilibrium, and above equilibrium is premium, and below equilibrium is discount. So equilibrium is just like a fair value price, while premium price is basically an expensive price where you could sell from. You buy at discount. So premium is basically an expensive price, and discount is really a cheap price. So you want to be buying at discount at a cheap price, and you want to be uploading, or you want to be selling at a very expensive price. Now let's bring in this analogy into a trader that is in the normal local market, buying and selling of goods, or let's say supermarket. Now you want to be buying your goods, or let's say your products, when it's literally at discount. That's why you see sometimes when these mentors, they offer discount price for their academy or for their mentorship. You see a whole lot of people flocking into that mentorship, because it's being offered at discount at the cheapest price. You understand me? So now you want to be buying at discount because it's cheap, and you want to be selling at premium because it's expensive. You don't want to start selling at loss inside of here, or you don't want to start selling inside of it because it's not going to be expensive. So that was the idea I had. So when price was here, I wanted to sell at an expensive price. And what's an expensive price? Once price is above 0.5 Fibonacci level, that's a premium price. We call that a premium price. Let's put that in place. Now going
over to the 1 hour time frame. I want my setup to form inside of that box. I want to see my setup from. And remember, now this is the 1 hour time frame. Now, what did I say on the 1 hour time frame? You can go back to the video to see what I said. I literally said that I wanted to see these highs being taken out. I wanted to see a graph of these highs. Now, did we have a graph of this high? Yes. Now, once there is a graph of this high, that's when my entry pattern starts forming. Once there is a liquidity graph, that's when I start looking for setups. So I made mention of on Tuesday, as you can see, this was Tuesday. So when I made mention of this, I wanted to see a graph. So it did grab, but it didn't grab on Tuesday, but the grab was valid because this was what I was expecting. So the grab happened during the afternoon session. So I don't trade on Mondays, so the afternoon session would have been a very perfect time to enter a trade in here. Do you get what I'm saying? So it's been a very perfect time to enter a trade in here. But let's just say, okay, we missed this potential entry setup in here. Let's say we missed this potential setup in here because of our trading time. We don't trade. Let's just get this off. I think you understand the context of that box right there. But let's take it off. Now, after liquidity grab, what do you want to see? You want to see a huge displacement that leaves behind a fair value gap and that broke structure. So as you can see in here, let me get this tool right here. We had a break here. We had a market structure shift in here with this wick here. So after that, it went back. You want to see price trading back into the fair value gap. Let me zoom in on that information so that you guys can literally see what I'm talking about. So right now, as you can see, after the buy side liquidity grab, let me label that. After the buy side liquidity grab, what do you want to see? A huge displacement candle like this. Huge displacement candle, breaking market structure. You understand? All of this contributes into breaking this market structure. Or if you go lower, you might see a little break of market structure. But let's just stay on the 1 hour time frame to run our analysis on the 1 hour time frame. Since it's a higher time frame, we are not meant to enter on this time frame. You can actually use the 1 hour time frame for directional buyers. So after price tapped into that fair value gap, now on Monday, coming into Monday, I only trade during the New York time. So let's mark out New York session, 7 a.m. and this is it. And the CPI, the CPI news. Let's check this. Let's go back to yesterday. Let's see, as you can see here, 8:30, like you see at 8:30 a.m. This is New York time, and you have the CPI news. You have all this USD news here. So I'm conscious of 8:30. Is there a setup before 8:30? So let's see. With the analogy that, remember, I wanted to start shorting here, but price literally I missed this based on my time. So moving to the M15 time frame, did we have a setup on the M15 time frame? Yes, we had a setup exactly at 7 a.m. New York time. Exactly at 7 a.m. New York time, we had a setup here. Now, that was a fair value gap being formed in there on the 15-minute time frame. So price traded inside the fair value gap and above equilibrium. So this was the first trade. Now I do call this a reversal fair value gap on the 1 hour time frame after the grab. The first fair value gap is always a reversal fair value gap to me. Then any subsequent fair value gap that come after that is what I refer to as a continuation fair value gap. I use that into taking my continuations lower or higher. So when I saw this around 6, it wasn't yet time for me to trade, but I expected price to come here in and around that time. So around 7 a.m. New York time, price traded into, and that was the trade for DXY. So if you even scale lower, you would see that a lot of continuation pattern fair value gaps from immediately before the news. This was it. Let's mark out the news time 8:15. This candle here, let's check out. Are you seeing any fair value gap? So on this time frame, you can see that a whole lot of continuation pattern, fair value gap literally appeared in price. Right before then, after tapping into here, you could see that there is an entry in here because let's take this out. The fair value gap in here. There's a fair value gap in here. So after tapping into the fair value gap, it dropped, gave us a fair value gap that we could trade off from. So price started going lower. Now, even before the 8:30 news, you could see that price presented a continuation fair value gap for us to trade into. So it's the continuation fair value gap must necessarily not grab liquidity. That's what I've seen. It must not grab liquidity. If it's a continuation fair value gap, it must not grab liquidity. Just what you need is just a break of market structure. That's all you need. In a continuation fair value gap, that's just all you need. A break of market structure for you to take your trade. That's all you need. You can see a break of market structure. That's all you need. So there was a break of market structure. Price traded in there by 8:25, and then we already have our entry before the news. Remember, our overall bias for DXY is bearish, so this was valid. This was very, very valid. Although I don't trade DXY, but this just like the analysis or the thought process I will have in my mind in trading DXY if I was to trade DXY. So as you can see, price met the first target. Let's go back to on our time frame. Sorry, I think that let's just use this. So let's go back. Let's use this. And as you can see, that was an easy trade on the DXY. That would have been as you can see, that would have been an easy trade on DXY. It's not about the entry, it's about the logic before the entry. So I hope you enjoyed that video, and I hope you understand the concept that I used there in analyzing this DXY chart. So if you have any questions, you can just drop a comment and I'll follow up from there. If you've not subscribed, if you like this content and you've not subscribed, please do well to subscribe to the channel. Let's just keep growing. I just started out this channel, and a little bit of motivation from you is going to help me push or help me post content like this out here for you guys. So I know I'm journaling my trades, and I'm also journaling my experience with ICT concepts, but at the same time, I think my journaling is going to help someone out there understand basic things or basic questions that he might not get to ask ICT. So this is what my videos are here for. Breaking down all these videos is going to help you understand little concepts that might be flocking through your mind. So do well to subscribe. So let's see you next time. Peace.